the president and CEO of the Greater New England Minority Supplier Development Council, and I am leading the session today of the Building Sustainable Businesses program, and we're going to focus today on using financial tools. Before we get started, I'd like one request. You don't have to keep them on the entire time, but if you could just turn your cameras on so I can see who's on the call, because I haven't been participating in every session. And it would just be helpful if you don't mind. So good morning, good morning. So before we get started, I'd like to make two requests. If we could just go around the room and everyone introduce yourself and tell me, what kind of business you're in. And I'm specifically focused on whether or not you sell goods or services. And if you're selling goods, if you're a manufacturer, a distributor, or a retailer, I'd like to know that. And if you're selling services, if you could just let us know what type of services you sell, because the presentation today is only going to be an hour, and we're going to make time available subsequent to this session for anyone that wants to have a one-on-one to talk about some of these issues in greater detail. But before we make the introductions, I want to take care of a couple of housekeeping things. One is that at the end of the session, Ileana is going to circulate an evaluation, and we'd appreciate it if you would take a few minutes and complete the evaluation, because it helps us, try to get better. Because anything you do, you can always do it better. So if you could take a few minutes once you get the evaluation from Ileana to complete it, we'd appreciate it. And again, if you're interested in continuing the conversation one-on-one over the next week or so, let Ileana know, and we will make arrangements to schedule some time to do that. So I'd like to get started. If we could just go around the room and have everyone introduce themselves. And again, just tell me, whether you sell goods or services, and if you sell services, just let us know what kind. Raghu, you want to start?
Sure, Peter, thanks. We are a ServiceNow implementation partner. ServiceNow is a workflow automation product used by many companies, and we do provide services implementing ServiceNow configuring and things like that. But we also have a product on ServiceNow platform, a product that is meant to reduce wasteful expenses on cloud. When companies move to cloud and they don't have proper governance and management around cloud infrastructure, provides wasteful expenses, we have a product to mitigate that.
So you basically sell goods and services?
Yes.
Okay, that's good to know. All right. Who's next? Sunny or Jay? Either one?
Did you call me?
Yeah.
Oh, hi. Yeah, Sunny is my mom, and I'm Joanna.
Oh, okay. Joanne?
Joanna.
Okay, Joanna.
Good morning.
Good morning.
Yeah, during the pandemic, my mom and we began to draw pictures after reading the scriptures from the Bible, and I was a catechist before, doing these drawings during the pandemic. And so we made up these religious education materials based on the scripture and our pictures for children. So we have basically a product, goods.
Okay. Who's next?
My name is Moise Care, physician. I'm the Can you hear me?
Yeah.
I'm the CEO of it's a home care,
Okay.
nursing and physical therapy for patients at home.
Okay. So you're selling services.
Yes.
Okay. Um, who's next? So it's not a pop quiz, so I'm just trying to, understand who's selling what. Andrea, Owina, Michelle, Blind Embarkments. You want to share with us whether you're selling goods or services?
This is Owena Farrell. I'm not selling goods or services. I was just here to listen in. I'm from Blue Cross Blue Shield of Massachusetts.
Okay. Well, you sell services.
Well, yes.
So Andrea, Michelle,
Hi, Michelle. I work with Dr. Care for his Dr. Care actually owns two business. I'm on behalf of the other one who supplies medical supply.
okay, so you sell products.
Yes.
Okay. So why don't we get started? Let me tell you what we were going to try to accomplish today. I'm going to try to give you the basic template to start, a budgeting process. And the goal is for you to, if you're not using budgets now, to start doing that. and the budgets are really not to play a gotcha game with yourself, but it's really to help you manage your businesses better. Because, budgets are really just guess. It's a guess about, future performance, and none of us can really, sort of predict the future with great specificity, but the budget process allows you to make an educated guess about not only your revenues, but also your expenses. And there always are going to be variances to the budget. There are going to be positive variances and negative variances, and that's okay, because what you're really trying to do is each year improve your guesses, and each year sort of use this budget to help you manage your business better. So let me sort of walk through the whole budgeting process. I would assume all of you are using some third-party software to keep your books and records, because the first thing you want to do if you're starting to prepare a budget, you need to gather information, because you don't want it to be a bunch of wild, guesses. You really want to have the budget that you prepare have some basis in fact, realizing that some of what you're going to do is totally, aspirational, because you can't control the future. One of the things that I always try to share about business, you can control expenses, but you pray for revenues. So when you're doing a budget, you'll find that it's very easy to prepare the expense section of the budget. It's a lot more challenging with any degree of comfort to prepare the revenue section, but they're both important. So, but in order to do this, in order to make good guesses, and that's all they really are about revenue, and in order to make accurate predictions about what your expenses are going to look like, the first thing you need to do is look at historical data. So you need to look at your historical financials, if you have them, and hopefully you do, and whether you're using a third-party service like QuickBooks or something like that, or you're just doing it on a spreadsheet, whatever you use, you need to start with that and look at 2 or 3 years, just so you can have some kind of frame of reference. The next thing that would be good to do is look at, tax returns, because the one thing that is pretty safe to say, we might tell little white lies about a lot of things, but we tend to, be more concerned, unless we're a former president that I will not name, tend not to tell little white lies on our tax returns, because the IRS doesn't take kindly to that. The other thing, if you have questions about the quality of your financial statements, if you told little white lies to Uncle Sam and haven't gotten caught, the other thing you might do before you sit down and start the budgeting process is pull out bank statements, because that can give you a pretty good sense of what money came in, what money went out. And then the other thing that's good, if you have employees, it's good to look at your payroll records, because major part of any business's expense structure are payroll related costs. So if you have a third party that takes care of payroll for you, or you use some cloud-based services, it'll give you a good sense of what you spend, not only on salaries and wages, but also fringe benefits, payroll taxes, because you need to factor all of that in when you're doing a budget. And then the final thing that would be good to look at, if you have them, especially for the looking forward part of this exercise, is pull out contracts or purchase orders. Because if you have contracts or purchase orders, that can help you, come up with a prediction for revenue that's more than just a total guess. So again, just to reiterate, the first thing is just gathering information, because the more information you can gather about historical financial performance, the more information you can gather about what you know about in the future with some certainty. Again, clients can decide to renege on contracts. They can, decide to renege on purchase orders, but it's better than just a pure guess. So I would pull all of those different pieces of information out, and I just take a few minutes or more to go through it, just so you have some frame of reference. Because I don't know how often you spend time on looking at finances and looking at these kinds of issues, but this is the time to take a step back, from the day-to-day of running your business, and try to see how all of the dots are connected. And it will be very important as you start this budget process. And then once you gather all this information, and as you're sitting down going through it, it's really important to bifurcate what you know versus what you hope for. Because what you know is you can look at, historical financials, you can look at some recent bank statements, you can look at tax returns, you can look at bills, and get a sense of what you're paying for different things, whether it's rent, whether it's payroll, whether it's insurance, whether it's travel, whatever it is, you can really get a good sense of what your expenses have been historically, and then make a prediction about what they should look like in the future. And then, if you look at, purchase orders, contracts, I don't know what your respective sales cycles look like, but if you think you're close to a piece of business, but you haven't signed a contract, you haven't received a purchase order, you can make an assessment. Do you want to, take some, probability of including that in your budget for the next year. I mean, that's a judgment question that you have to think through. But again, you want to gather all this information, you want to take a step back and look at it, and you really want to think through, what's the difference between things I know and things I'm hoping for? Because again, to sort of put it simplistically, in business, you can control expenses, you can predict expenses pretty well, but you pray for revenues. So as we go through this process, just keep that in mind. Now, once you do all of that, this next page, if I can. No, I didn't want to do that. Okay. This next page just sort of breaks down what a budget will look like depending on whether you're selling goods or whether you're selling services. And look, these are all made up numbers, but I wanted to just walk you through what the basic differences are. The basic difference, whether you're selling goods or services, some things are going to look the same in the budget. And that is your revenue is going to be, your sales. And again, on your tax return, your personal tax return, you might refer to this as income, but in business, I'm focused on sales. And then if you're selling goods, I'm focused on cost of goods sold. This row right here, because cost of goods sold means, if you're selling, let's who was it? Joanna, who's selling religious materials and pictures. Now, I get the sense that she is manufacturing those herself along with her mother, but if they had to buy those from a third party, they would buy those religious education materials and they would buy those pictures for some price and they would sell it for what is hopefully a higher price. So, but whatever they sell it for is separate from the question of how much did it cost to get it to sell. So the price at which if you're a manufacturer, the price in which you produced it costs you to produce that widget. Someone I think said that they sell medical supplies. The price, if you're a retailer, that you buy from some distributor to resell it to the public. If you are a distributor, price at which you bought from the original equipment manufacturer, that's gonna all be your cost of goods sold. And then this row right under cost of goods sold, if you're selling goods, is going to be your gross margin. You're going to have gross margin if you're selling services, but you're going to get to it in a different way. So that's very important because your gross margin, especially this percentage, which is really the gross margin divided by your revenue, that really gives you an indicator of how profitable a particular line of business might be. And in general, for someone like Raghu, who's selling both a product and services, I would guess, and it's only a guess, that probably his service business is more profitable as a line of business than the products he sells, because the markup on services, the potential markup is a lot higher than the potential markup is on most goods. But we can explore that offline. And then once you get past the gross margin, when you're selling goods, you got all of these selling, general, administrative expenses. So you got personnel costs, which is not only the salaries and wages, but also payroll taxes and benefits. You may have marketing expenses. You may have travel. If you're renting space, you might have a variety of occupancy costs, including rent, utilities, janitorial. You might have insurance. A lot of clients want their vendors to have insurance in place. You may have memberships with professional organizations or business groups. You may have subscriptions, for either general business or something that's specific to your industry. If you're selling and providing some type of credit, in the form of generating accounts receivable, sometimes people stiff you. So you might need to have a bad debt expense. And then finally, depreciation and amortization. If you bought a computer, if you bought furniture, on your balance sheet, all of those things will show up as fixed assets. And what you should do, not for tax purposes, but financial reporting purposes, you should amortize or depreciate those fixed assets, every month and certainly every year. And then you get all of your, what I'm calling SG&A, selling, general, and administrative expenses, and you subtract that from your gross margin, and then that drops down to a pre-tax income number. And I didn't include a factor for taxes because everyone has different types of organizational structure for their businesses. Some of you might have subchapter S, some of you might have LLCs. So I just wanted to make it simple, because at the end of the day, if you have pre-tax income, means that you do have the possibility of paying taxes, and while no one wants to pay taxes, it's better to have pre-tax income than to not have it. So if you look at this data on the right side, it's the real difference if you're selling services as opposed to goods. Instead of a cost of goods sold number, you have a cost of sales number. Because what you're really selling, if you're selling services, you're selling either your time or your expertise. So you're really, selling some type of human capital as opposed to selling a physical good that someone's going to buy or use. And so the primary thing is going to be, how do you build that time? How do you build that expertise? You could build it hourly. You could build it on a project basis. It's a variety of ways you could do it. I'm not going to get into all of those different permutations here, but just know that the major difference in the way you would budget is when you're selling goods, what you sell shows up in the cost of goods sold row. If you're selling services, what you sell, whether it's time or something of value or advice, shows up in the cost of sales revenue. And again, this is a generalization, but it's probably pretty accurate if you looked at a whole lot of different companies. In general, a service company probably has a higher gross profit margin and probably more profitable than someone who's selling goods, because the value of that time, the value of that advice, the value of that whatever that service is, usually commands a higher ticket than selling a unit of soda or something like that. So in general, the gross margin for services is typically higher than the gross margin for goods. So let me pause right there, see if there are any questions before I move on. Hearing none. So, let me share. So can everyone see this?
Yes, we can see that.
Okay, thank you.
Yes.
So I'm not great at this, so that's why I got to make sure I shared it. This is a template of a monthly budget for someone who is selling goods. So this is a scenario, and again, anyone who wants to walk through setting up something like this for themselves, we can do this, on a one-on-one session that Ileana will help schedule. But this is a template, and I'm going to walk you through how I did this. This is a template for someone who's selling goods, and I'm assuming they got 2 products. And I just arbitrarily came up with a scenario for 2 products because, for example, in the case of Joanna, she, as I understand it, she's selling 2 types of products. She's selling religious educational materials, and she's selling pictures. So you can have a budget that has as many products as you sell. And I got a template for those who are selling services, and you can have a template for as many different types of service contracts that you've entered into. So basically, just to walk through this at a high level, and then I'll show you how I built this up. I start with the revenue. In this case, we had 2 products. I had my cost of goods sold. So you drop down on row 17, it computed my gross profit, my gross margin by month. And then at the very end, it sort of totaled it all up. So I had an annual, gross margin number. And then I actually went through and let me just get back. So then I had all these different components of selling general and administrative expenses by month. And then each month I had a profit, pre-tax profit, which is better than having a pre-tax loss. And let me quickly run through how I built this up, because again, you could use this template, for your own business. You need to tweak it, obviously, but it's a real simple way to help you sort of manage your business, and especially help you, sort of come up with your own budget. The first thing I did, I looked at, what's driving revenue and gross margin. I had a separate worksheet. And so I'm assuming in this particular case, the easiest way to come up with a revenue for each product is to make an estimate of how many units I'm going to sell. Like for product 1, I assume that in the month of January, I'd sell 50,000 units, and that each unit would have a sales price of $5. So, very simple math. The revenue for January for product 1 is $250,000. And again, looking at the cost of goods sold, I assume that for the product I sold for $5, it cost me $3.50 to either make it or to buy it from someone else. So again, if I sell 50,000 units in January, just multiplying 50,000 by 350, my cost of goods sold for the month of January is $175,000. So the cost of goods sold to revenue number is 70%, which means, my gross margin for product 1 is 30%. Now, again, make an assumption about 2 different products. I assume for, product 2, I sell product 2 for $10 a unit. And I assume in January, I'd sell 10,000 units. So my revenue for the month from product 2 is $100,000. I assume that it costs me $8 to either manufacture or to buy from someone else this product, which I sell for $10. So So my cost of goods sold for January is $80,000 if I sell 10,000 units of product two. So my gross profit margin is $20,000, just 100,000 less 80,000. So I have a 20% gross margin percentage. So that's the contribution. So the contribution from product two is obviously less than the gross margin percentage from product one. And this is important because, one of the things I want to, sort of stress to everyone, this exercise allows you to do two things. It allows you to make predictions about what your revenues are with something more than just a wild guess, but it also can help you understand that not all products you sell drive the same profitability for your business. So if you're operating in a world of scarce resources, then you have to make a choice sometimes. If there's one product that has a gross profit margin of 30% and another has a gross profit margin of 20%, and I'm running out of cash, and I got the same demand for both product one and product two, it's smarter to put more of my resources on trying to sell product one in this example, because the gross profit margin is a lot higher. So it's just something to keep in mind. Then the other thing I did in terms of the template for selling goods, in terms of a budget, is, I looked at personnel costs. So again, in this example, I assume I had 5 employees. This is their monthly salary or wages for each one. And then I assume a tax and benefit factor of 15%. And that's just a guess. You need to look at your actual, if you have employees, look at what you're actually paying your employees in terms of payroll taxes and in terms of the benefits you offer that the company pays for, and figure out what that appropriate number should be. But this is a critical thing because, typically, if you're selling goods, your personnel costs are going to be, pretty hefty once you get past your cost of goods sold. And then the rest of this, again, you would gather all of this. This is their other SG&A. You gather all of this from historical information. Your marketing might change depending on what your strategy is on a particular year. Depending on the type of business you have, you may not even have travel costs, but you're probably going to have occupancy costs, insurance costs, and if you're selling on anything other than cash and carry, you're probably going to have a bad debt expense if you generate receivables because people don't pay. And again, finally, as I mentioned, if you have any fixed assets, you're going to have depreciation and amortization because you would depreciate the computer, you depreciate the furniture, you would amortize the software. And typically all of these fixed assets that you would have in most businesses are going to have a relatively short life. So we're not talking about a long amortization period. So I want to stop sharing this and just show you an example for if you're selling services, what it would look like. So give me 1 second just to make the transition. Okay, so this is the budget template if you're selling services. Can everyone see that now?
Yes, we can, Peter.
Okay, thank you. So here, very simple example. I assume that my service business had different projects. And this is just, you could have a whole lot of different ways you would organize your budget, but I tried to make it simple. I said, look, I got a service business. I got 2 projects, project 1, project 2. So as I mentioned before, the principal difference in the presentation is, the cost of sales as opposed to cost of goods sold. So the cost of sales, just conceptually, is I'm selling, as I mentioned before, I'm selling either hours, I'm selling advice, I'm selling something that's of value that is inside the human head or inside some machine as opposed to a good. So let's just walk through how I generated this. And again, if you're in a service business, you might have a different approach, but I just wanted to give you an example. So let's go to what drives it, the revenue and gross margin numbers. So here, I assume project 1, project 2, I assume that we build our customer based on hours. So I'm assuming in project 1, like for the month of January, I billed 3,000 hours and the hourly billing rate was $100 an hour. So that's 300,000 in revenue from project 1. And I assume, again, this is why, in general, selling services is more profitable than selling goods. I assume that my direct personnel costs for this particular project, the people that actually provide the service to my client, I assume I pay them $50 an hour. So if we build out 3,000 hours in January, my cost of sales for project 1 in the month of January is $150,000. So my cost of sales margin is 50%, which means my gross profit margin is 50%. So that's pretty attractive. And then for project 2, again, just made up numbers. I assumed, again, I'm billing on an hourly basis. I'm selling time in effect. I billed 2,500 hours in the month of January for project 2. My hourly rate for project 2 is $150 instead of $100 as I had in the other example. But my cost of sales on an hourly basis is the same. So project 2 is actually more profitable because the gross profit margin, again, which is the revenue less the cost of sales, is 67% for project 2 as opposed to 50% for project 1. So again, you're going to have different ways you bill. You might not bill based on time. You might bill on some other factors, but this is just a way, if you're selling time, that you could build a budget that makes sense for your business. And again, you can have as many projects, they might not last an entire year, whatever they are, you can build a budget based on what you know about your contracts in place, what you know about purchase orders that you already have in hand or you expect to get shortly. And you can build a revenue and cost of sales budget that ultimately feeds into this monthly summary income statement. So the only thing I want to sort of take a minute to talk about on this, the budget for services as opposed to goods, is that here, I assume that, the highest paid person is probably you. And I'm assuming that if you're selling services as opposed to goods, that some amount of your time may be devoted to directly providing something that the client buys. So you're not just doing administrative work and running the business, but you might also be part of the actual service solution with respect to any of the projects that you have. So that's why I sort of note that, because when you're building a budget and you're a service provider, you need to figure out how much time, if any, you should allocate of your time, whoever the most senior person is, the owner of the company, to not just administrative functions of running the business, but also of actually providing the service. And hopefully that makes sense. So again, we're going to send these templates out after, but I want to just end with one final thing. And let me just go back. I'm going to stop sharing and go back to one of the earlier screens, if I can get back there. Okay. Can everyone see this screen? Oh, stop sharing. Bear with me. Okay. So what do you do once you have this budget? The budget is just a real, it's a real guess, even if you try to make it scientific. And sometimes we guess well, and sometimes we don't. The real benefit of a budget is focused on this particular page. To really get a handle on how good your predictive powers have been is to each month take some time, and it should take a lot of time, to compare actual versus budget, not only for the current month, but also year to date. Because again, it's easy to sort of guess right, like a month out of 12, but if you guess right and again, variances are okay, but you want to make sure you understand what drove the variance between actual and budget for revenue, cost of goods sold, or cost of sales, depending on whether you're selling goods or services, other SG&A, and pre-tax income. And there are two things you want to measure, not only for each month, but also year to date. You want to measure the dollar amount of the variance and a percentage. And the variance that you want to look at, if your actual revenue is less than your budgeted revenue, you have a negative variance. If your cost of sales, actual cost of sales, is less than your budgeted cost of sales, or your budgeted cost of goods sold, you have a positive variance. Again, it's always better to spend less money than more on your expenses, because that means that more is flowing to the bottom line. And if you go down to other SG&A, when you look at these numbers, if your actual expenses are less than your budget expenses, that's a positive variance. So you want to measure each month and year to date, not only the dollar amount of the good or the bad, but also the percentage to the budget, because that gives you, a sense of context. And all of that helps you, sort of run the business, I think, more effectively. Now I'm going to stop sharing right now. And again, all this material is going to be shared with everyone, but I want to see if we have any questions.
Hi, Peter, this is Raghu. One question that I have is, last year was an anomaly, right?
Mm-hmm.
There's really, last year's data should not be considered in forecasting and budgeting, maybe.
Well, the expense side probably was similar, right?
Not really, because when you don't have that many projects, the expenses naturally went down.
Yeah, so the cost of sales should have went down dramatically.
Yeah, went down.
Okay.
Your travel expense, everything
Right.
else, your payroll went down.
Well, then look at 2 years back and 3 years back, because again, that's a really good point. You want to try to get a sense of what a normalized run rate on expenses is. And so if 2020 was an anomaly because you weren't traveling, because you had fewer projects, it would give you a sort of skewed perspective about the business's expense base. if you just looked at last year. So that's a great point. So it might be more effective to go back 2 years or 3 years. And you know what I always do? Because again, it's always better to, under promise and over deliver. So I would go back 3 years in each category. I would try to see, what was the most expensive year for that category. So if rent was higher 2 years ago for some, extraordinary reason, when I'm building my budget for this year, I'd want to take the highest expense number I could have. And so I want to be, pretty conservative on both sides. I want to make sure, and conservative when you talk about revenue means you don't guess too high on the revenue, but you guess higher on expenses, if that makes sense. So, but that's a great point though. If 2020 was an aberration that affected your expense base, then it would be better to look at even, earlier years to see in a normalized environment, what did the expense base look like? Any other questions? Joanna?
Yes, I have a question. Now that I'm seeing these, I guess, spreadsheets and learning more about, how to figure out everything, do you give, I don't know, like consultations?
Yeah. As I mentioned at the outset, if you want to have a one-on-one session to talk about this in more detail, just reach out to Ileana and we'll schedule it. Because I have, not only can I make myself available, but we actually have a consultant who's a certified public accountant. So one of us can, sort of talk, through some of these things in more detail in private and on a one-on-one basis.
Okay, do you guys have a phone number or an email?
Ileana will send you an email with our contact information.
Okay, thank you.
Any other questions?
I have a question. Do you happen to know, because what I'm thinking right now, what pops up in my mind from watching the news, I guess I had a curiosity of businesses that have prospered during the pandemic. And one business that I remember from watching the news that seemed to have prospered was puzzles. People who sell puzzles.
Right.
They're like, I remember on the news, there was one company that received like more orders for the puzzles. Do you happen to know what other kinds of businesses have prospered during the pandemic?
Well, that's a hard one to answer. I can tell you, it's clear the ones that didn't do well. Anyone that was dependent upon a customer coming to them and staying in bars, movie theaters, really suffered. And a lot of retailers who really dependent upon foot traffic and people coming inside, suffer. So, barbershops, beauty salons, they suffered. So, but there are businesses that prospered in 2020. Anyone who could still communicate with their customers and do business with their customers without seeing them face to face did okay. In fact, this morning I was talking to a friend of mine who is in the investment business, and he was saying that his firm had one of their best years ever because there was a lot of activity. They could still do business with customers with conference calls and Zoom calls, and commerce was still taking place in their space. So it really varies. But if you were, like I said before, if you had a business where you had to go, someone had to come to you and come inside.
Seems like we may have lost Peter. I'm sure he's coming back in just a moment.
Hi, Ileana.
Yes.
Okay, so let me just answer the question that according to how I think about it. First of all, you can actually conduct research as well online to find out what kinds of business, generally speaking, what categories of businesses have really thrived during the pandemic. But one of the things that I have that we have seen, generally speaking, is that companies that that are in things like the delivery business has exploded tremendously. Before the pandemic, for instance, nobody was ordering groceries. Everybody's ordering groceries. Companies that are now making petitions, and petitions are not going to go away anytime soon, I think, because people have become, I think, just more aware of the transmission of disease. And so companies that are involved in petition and being able to modify existing furniture to create like safe, contained spaces, those have done extremely well. But I think, generally speaking, it's really hard to just say. But I think you kind of have to look at the conditions that have existed over the past year, and ask yourself, what are the behavioral patterns are going to be going forward into the foreseeable future? What's going to stay with us? Because it's one thing to look at PPP stuff, which is the obvious answer, but that's a very, to the point that Peter was making with respect to the cost of goods sold, that's a very low margin business. You're going to pay a very, very high price for, relatively speaking, for goods that you can probably not sell at a great, a significant advantage because of the supply and saturation in the marketplace. But look at more specialized services and think about it from the standpoint of what's likely to stay. But there is some research that you can conduct online to determine what could exist. And some of those resources, I think it was in module 2. If you have the book, if you go back to module 2, it actually outlines a number of resources that you can use to be able to gather information with respect to conducting intelligence on a marketplace, intelligence on other companies, and that sort of a thing. So that's what I would highly suggest.
So I'm back. Sorry about that.
Sorry.
So one other thing I would suggest in terms of looking to the future is, you had a change in administration in January. The new administration is very focused on the impact of climate change. And there's a plan that's been put forward that really has a significant focus on renewable energy. So if you think about it, if we actually, for example, had a major push to shift from, carbon-focused energy sources to, say, solar energy, then somebody's going to have to install solar panels on homes and buildings across the country. So that could be a significant business that's not, a real force today. So there are opportunities like that that are not, just based on coming out of the pandemic, but also based on the fact that you have a new administration in place with new priorities. So we got time for one more question, and then we're right at the end of our hour. But as I mentioned, if you have an interest in sort of walking through some of these templates and refining them for your business on a one-on-one basis, please reach out to Ileana. Ileana, if you could put your contact information in the chat, that would probably be helpful. Or, we'll just send an email to everyone who's on the call.
Will do. And I know Teresa has her hand raised. I know she has a question for you, Peter.
Sure.
Hi, thank you. And how can we estimate and predict our coming year with real variables and with a factor of sustainability?
So what business are you in?
Floristery and packs for flowers, candies.
So in terms of, you need to, and how many different types of products do you sell?
Many, but let's say 20, but the point is that I go to 2 different markets.
Right.
So wholesale and retailers.
Okay. And do you sell, okay, let me sort of attack it this way. For some of the products, I would assume you buy them from retailers, and other products you buy them from distributors. Is that fair to say?
No, I buy from distributors and from factory wholesale.
Okay, so distributors and factory wholesalers. So is the cost of those products different from those 2 channels? I would assume it is.
Yes.
Okay, so my suggestion would be, and for the 20 or so products, does demand amongst those products fluctuate, or is it pretty consistent over time?
It's a company that is about to start coming June.
Okay.
So I want to make the financial plan.
Right.
And consider all the variables. And now sustainability is and eco-friendly is something that is trendy.
Right.
So how can I reflect that on my business?
So have you attended earlier sessions of this program?
No.
Okay, so if you want to sort of follow up one-on-one, it would be helpful to one, sort of do a SWOT analysis to sort of figure out what the opportunities are, what your strengths and weaknesses are, and what the threats are. And then it would be helpful to do some kind of market analysis to understand, in your particular segment, because I would assume you're going to sell locally, what's the potential share of the market you could realistically capture, and to capture that share, what kind of marketing plan do you have in place? What kind of sales cycle do you contemplate? Because it's hard to answer your question in a vacuum with all of that, because this whole budget process presumes that you have something more to back you up than an educated guess. The educated guess is at some point all you have, but the revenue numbers are not just something you pull out of thin air. It really is a function of, if you're selling, who are you selling to? You're selling to consumers, you're selling to businesses. If you're selling to consumers, it's going to be a function of, what's going to be about your marketing strategy and your marketing plan that makes them come to you rather than, some other competitors. If you're selling to businesses, what's going to be your angle to get them to come to you? Do you have any commitments to purchase from you before you open the doors? It's really going to, sort of depend on variables like that. So it's hard to answer in a vacuum, but those are some of the things that if you've done a SWOT analysis, if you've sort of done a market analysis, have a marketing plan and a marketing strategy, you can come up with educated guesses that are more educated than guess. It's still going to be a guess because, again, like I said before, you control expenses, but you pray for revenues.
Thank you.
Okay. So we're 4 minutes over. Thank you for attending today. I hope you found this valuable. Ileana is going to send out all of these templates to those who are in attendance. If you're reviewing me, you think it'd be helpful, but you want to tweak it a little bit, reach out to us and we'll, sort of get together with you one-on-one. And please make sure you complete an evaluation that Ileana is going to forward. And thank you and have a good rest of the week.
Thank you.
Take care.
Thank you.
Thank you.